Second delay here. We should be ready to go. All right. Going live in MLO net. We should be live now. It's always a little awkward for the first 5 to 15 seconds. Welcome, Justin from California. Thank you so much for jumping on today.
And hey, Michael, thanks for having me.
Oh, yeah, of course. Thank you for sharing part of your world with us. I know you work in the same company as Scott Groves, and Scott introduced me to you. And I was talking to him a couple weeks ago. I said, who out there can help us provide more value to the LOs? He said, man, you got to bring Justin on. This guy really gets non-QM. He really understands jumbo, and he's just doing so much in the market space with products that other people really aren't good at or aware of. So I appreciate your time today, and I know we're going to ask you a bunch of questions that relate to non-QM, but Let me first ask you, I guess, who are you? How long have you been in the industry? What qualifies you to be on camera today?
Yeah, sure. No problem. I'll give you the quick background story. I started in the business in the year 2000, so 18 and a half years ago. Just happenstance. Those were the good old days where when you needed a job, you just went out and got a job after you finished college. You didn't have to go intern for free for 6 months after having a whole bunch of student loans or any of the nonsense that all these poor suckers who graduate from college have to do now. So I just happenstance ended up at a mortgage company in Beverly Hills because I needed a job. I had just moved to LA with my girlfriend at the time and needed to pay the bills. So ended up at a mortgage company. Turns out the woman I was working for, her name's Gloria Schulman. She's been in the business for years and years. She owned the first broker in California to close $1 billion with a B, $1 billion in business. And she also happens to be Mark Cohen's mother, who, if you read the Scotsman Guide, Mark Cohen's #1 every year in volume. So little did I know I was learning from somebody who knew a lot. She taught me a ton about relationship lending and building a strong referral-based business, which was unique at that time because as we were coming in through the early to mid-aughts, a lot of the people who were what you might consider my peers, other early to mid-20s guys who were in the mortgage industry, were building their business and building their bank accounts via cold calling and all these boiler room type of situations, cranking out subprime deals, all this, and they were certainly making money hand over fist a lot faster than I was. But I didn't realize at the time. But it ended up serving me well because then when the shit hit the fan in 2007, 2008, I was still left with a very strong business because it was all based upon referrals and relationships. So I ended up sticking with her at her company for about 8 years. Then just due to market conditions, went to another small mortgage bank in Beverly Hills that was eventually bought by Bank of California, which is interesting as it comes to our future topic of non-QM because they were one of the real pioneers on a lot of the non-QM products, rolling them out as early as I think late 2012, early 2013 with the bank statements and the asset depletion and those types of things that did not fit into the traditional ATR QM definitions that appeared in the Frank-Dodd Act. So Bank of California bought them. Once we kind of became a big bank, I decided to leave there and go to another smaller mortgage bank since Bank of California was now offering those products on a wholesale and correspondent basis as well. And then about 2.5 years ago, Scott and I had become friendly and we decided to partner up. And so here I am at New American Funding.
Awesome, man. I love it. So, back in the day, they might have called it Alt-A or subprime, but, today we call it non-QM. So let's dive into that. Is that most of your business right now, or is it just become a bigger piece of your business than it was before?
It's become a bigger business in the past probably 18 months. Right now, it accounts for about 35 to 40% of my business from a volume standpoint. in any given month. Probably more like 20 to 25% on a unit standpoint, but the transactions that I'm dealing with are generally higher dollar amounts. And I hesitate. I would never describe the non-QM programs that I'm working on as subprime in any way. And the reason being is that they are credit-worthy borrowers. We are using some sort of different calculation to come to their ATR, but they are credit-worthy borrowers. They generally have very strong credit scores and have a substantial equity position, either down payment or if it's a refinance, they're established equity in the property, and so they're it's a low risk situation outside of the fact that the investor, being that it's a non-QM loan, is opening themselves up to future litigation potentially from a borrower. Like that's really the only distinguishing thing that's different between the the non-QM and what would be considered a normal prime mortgage. We're using 12 months of bank statements, or we're doing some sort of asset depletion calculation, or we're using 6 months of bank statements, or we're going with full income documentation and having some other sort of guideline that doesn't fall within the normal realm, like how to look at a departing residence and the debt obligation from that, if it's listed for sale, if it's not listed for sale, can we exclude it, can we not exclude it?
Hey, Justin, let me pop in here real quick. So one of the questions I have about, when we see these non-QM products is, I think some of the perception is that, it's kind of what Fish said earlier, like, hey, we used to be called all day or subprime, and you clarified it right away. Like, how do you kind of change the perception with your clientele or with your real estate agents or something of that nature that this is not subprime, that these are viable products, they're safe products, it's a good quality product for somebody to take advantage of? Have you had, flyers or lunch and learns or videos, or kind of what are you doing with that?
Yeah, obviously I do all of those, the flyers, the lunch and learns and whatnot, and I really do stress to them that this is for, credit-worthy borrowers, and it's who may have a unique tax situation or a unique income situation that doesn't fit in the normal big box bank underwriting scenario, and that it's more of a quote unquote makes sense underwriting position for the investor. And then I explain to them and I explain to the client, look, the majority of the time these are people who have heavy tax shelters for some reason or another, right? They're self-employed and they've got heavy tax shelters. And then it becomes just straightforward math, and I say, okay, well, here's what the loan is, here's what the terms are. Yes, I'm not going to try and hide behind it and pretend like the terms aren't worse. But it's very simple math. You say, okay, well, you got your $1 million loan, and your rate is a half a point higher, maybe 3/4 of a point higher than it would be if you fit into Chase's box or Wells box or whatever. So your payment's $350 more a month. So you can either take that, or you can structure your tax returns next year in such a way where you're going to pay $50,000, $75,000 in additional income tax to fit into the big box bank underwriting. Which do you prefer? It's pretty straightforward. Do you want to pay an extra $4,000 or $5,000 a year in interest, or do you want to restructure your financials in a way that qualifies you traditionally and perhaps be subject to a much larger income tax bill?
That's a great idea. I honestly never would have thought about that. Actually, my mind stopped when you talked about the $1 million loan. Fish was sitting there doing calculations. He's like, wow, that's like 8 loans for me.
Oh, right, yeah. Yeah, I mean, that's kind of one of the reasons probably that it's unique here to Los Angeles and why we're doing so much of it. My average loan amount now is north of $800, so it's pretty substantial.
Are you finding borrowers are shopping you with other local lenders for the same non-QM investors
No.
that you're ultimately using, or not really?
No. Though I am anticipating that coming.
Mm-hmm.
So I'm trying to stay ahead of that game right now. I haven't experienced it a ton, but I do anticipate it happening. I think that I've really been on the forefront of being able to offer the product in a unique way, and but as more and more people roll it out, there will be that competition for sure.
Well, one thing that I think I'm hearing, correct me if I'm wrong, is that, yes, you're offering the product, but you've made sure that all the products, all the options, including the jumbo and standard options, so that you can have these conversations intelligently and not just kind of like go lean on an account rep or just tell the borrower this is what you got to do no matter what. This is your only option. I mean, you're breaking it down, you're explaining it to them, you're showing them exactly what they would need to do to qualify for the other options. That knowledge is really what's giving you the power and influence to get them to make the decision to move forward, something like that, right?
Yeah, absolutely. I mean, if this is a market you're going to go into, you better know the guidelines, and you better know what it is that you're offering and what you're selling, and be able to speak intelligently and confidently about it, because that's what's really going to instill the confidence in the borrowers. And then when you explain to them why they're getting a higher rate, why they're paying more on a monthly basis, and why it's to their advantage to do that, puts you in a very different position, and you do avoid a lot of that shopping. Now, there are some people who just can't get their head around it, and they think, hey, I make all this money, they're self-employed, I make all this money, I should be able to get, the Bank of America 3.5% 30-year fixed loan that, my neighbor got. And, they have to go hear it from 3 or 4 other people before they believe me. Usually those people are gone, and, it takes them a long time to come back. But, I think for the most part, if you understand the guidelines and you can clearly express to everyone why they're better off this way, you avoid a lot of that.
So how did you go about becoming that expert? Did you just print out guidelines and start reading it? Did you, we our Fish's partner in boot camp, Jay Macon, always talks about, he's like, you know what I did? He's like, I read all these VA guidelines. Like, I know the VA program as well as anybody does. How did you go about becoming an expert with these programs?
Yeah, that's really it. Is you identify your market. That guy probably identified that he's a VA. He's going to run in the VA circles, and he better know that. More and more, I realized I was running. My price point was going up. My loan amount was going up. I'm running in these jumbo circles, and more people are going to fit into these transactions. So I literally, I did the same thing. I learned the guidelines. We rolled out a new portfolio program here at NAF. The guidelines are 20 pages long. I printed them out and, basically memorized them more or less. And then I got intimately involved with the underwriters and the credit policy managers on, setting policy and establishing myself as an expert from a sales perspective to them, and how can we make this better? Here's where I think that we've got a problem, like where maybe, I even went so far as to tell them, hey, I think you really made a mistake in this guideline. You're exposing yourself to some potential problems here with EPOs and stuff like that. And, it's amazing how much goodwill that will earn you with your credit policy team as well, which will in turn into exceptions on future deals. So.
Right. And I'm guessing that you also became an expert at not just understanding and knowing the guidelines, but learning how to help borrowers interpret and understand those as well. So you learn how to transition from speaking mortgagee to consumer fairly quickly,
Absolutely.
Right?
Yeah, absolutely. I mean, a lot of the people that we work with are, frankly, artists. We deal with a lot of people in the entertainment industry here in LA. They're not, with always some exceptions, they're not super financially savvy. They don't understand that their CPA is trying to protect them from, massive income tax bills and things like that. And they just know what their cash flow looks like. So I try and express to them, yeah, that's how we're going to look at this loan as well. We want to look at your cash flow. So, yeah, that's pretty much where it's come from.
Hey, guys, I got to bounce. Justin, I just want to say thank you so much. I know it's quick, but I appreciate you hopping on here. Fish is
no
going to take
problem.
over. Also want to let everybody know, I literally just got an email with the title doc request. and the email address is at beetlejuice.com. So I'm guessing, Fish, if you get that, that's probably spam, buddy. So, all right, Justin, thanks so much, man.
All right, take care, TJ.
Thanks, buddy. All right, Justin. So do you prep your borrowers for like an annual review or do something to prevent like the EPOs that you just talked about? I mean, is there long-term relationships that you're building with these products? Are you who come back to you again and again?
Yeah, absolutely. And there's a couple of different ways that we're kind of hedging against the EPO. One is, I am educating them on, hey, now that you've got this is a solution, and you don't have to, change the way you file your tax returns next year, which means they won't qualify again next year. So that helps offset some of the EPOs. Also, though, we're offering a 1.0 buy down on all purchase transactions, which kind of usually buys us a year. From the on the EPOs, which is how long the EPO period is on our portfolio non-QM product as well. So if the standard 30-year fixed on that is 5.5, they get 4.5 for the first year. So generally, nobody's going to be in position to refinance. That's one of the ways that we're hedging against the EPOs. But that's one of the things when we first rolled out our internal product, rather than a broker product, that I went over with the CPMs, like, hey, some of these guidelines are certainly going to lead to EPOs, so how do we tweak them in a way to protect the company and protect the profits of the company as well? In particular, one of them was a little bit too loose of a departing residence guideline, and I said, you're really setting yourself up here for, once they sell that departing residence, paying down their new loan or paying off their new loan, et cetera. So we tweaked it a little bit in order to kind of make it so that they wouldn't be able to pull that off quite as easily. We wouldn't give EPO.
Makes sense. So I guess one question that I keep wondering is, are you using the broker product still? Are you using Angel Oak? Are you using some of the Caliber products? Or are you mostly using your internal stuff at this point?
I'm mostly using the internal stuff. I also using Bank of California, Fifth Street, which I don't think you're in Michigan, right?
Yeah, we don't have that out here.
Yeah, I don't think you guys have that there, but they're Fifth Street is old Bank of Internet guys, teams from the bank. You're familiar with Bank of Internet. They've been pretty liberal in their underwriting. They very much make sense. They want to see reserves and equity, and if you've got that, they'll pretty much put a price on anything, which has been really fantastic. They've gotten some really difficult transactions done. And who else? Bank of Internet, Bank of Cal, Fifth Street. That's the majority of it. And then, the Caliber product is great for high LTV transactions, but, they've got some competitors now too. Galton pretty much has a mirror product of Caliber. I particularly found that Caliber was difficult to deal with on their non-QM. That may have been because they saw New American Funding. They rolled it out to New American Funding, and they saw that. Then they're like, "Well, really, you guys are our competitor on the retail side, but we're giving you this other product on the correspondent side." So, I think they made it a little bit more difficult than it needed to be.
Yep. So now, when people come in to work with you guys, do you kind of teach everybody on your team, or is it more of like people come to you and people on your team send the deals to you that they can't figure out?
No, we have a very open policy here, and we get together with pipeline meeting, everybody in the same room or at worst on a Zoom platform every week, and we all share knowledge. I really have tried very, very hard, Scott and I have over the past few years, to create what we call a culture of camaraderie, where everybody shares their knowledge, they share their wins, they share their losses, where they're finding success, where they're running into challenges, and there's no secrets here. There's no, I've got the secret sauce and it only gets done if it runs through me. That's bullshit. I don't think it has to happen that way. And a rising tide raises all ships, right? That's the attitude that we take here. So I'm always happy to share information with everybody on my team.
Awesome. Do you guys do a lot of deals out of state, or is it pretty much all California?
The majority of our transactions are in California, but we also do, a couple of deals a month out of state.
Awesome, man. So one question I always ask everybody before we end the call, and I'll treat you no differently than the guys who do $50,000 down payment assistance loans. I
Sure.
take you out of California today, and I plop you in Manhattan, let's say. And of course, you got to learn the transfer taxes and the New York and rules and all that kind of stuff. What would you do to reestablish yourself, perhaps in a similar style market, but on the other side of the country, as far as marketing and as far as getting the word out there? What would you do right away to keep running and to build a brand new business if you had to do that?
I would choose, I would look to establish relationships with 5 to 10 agents who I feel like I have some sort of connection with, and then, pitch them on what the value add is on my expertise versus, maybe who they're dealing with now. And really, really rely on that. And I would start over again with that referral-based business. Exploit some of my past successes and where I've done, if it was Manhattan, where I've done other high-end business, et cetera, and that, I'm not scared of those jumbo loans. I'm not scared of the clientele. I'm not scared of the business managers involved, and all of these other things that come along with the sort of higher-end situation. Now, you plop me down in the middle of Omaha, Nebraska? No, that's a very different question. I don't know how well I would do there. It becomes such a high volume unit game versus what I do here. I think it's a very different challenge, and I would have to think about, do I want to go after builders and other situations like that where I could do more and more units. So
you looked a little scared as you said Omaha. There was some fear in your eyes.
I think that would be really hard. I don't want to go to a place where in order to close $8 to $10 million a month, I've got to do, I don't know, how many units is that where you are? Like, that's a lot.
34 units. You got a lot, yeah, for sure.
40
So
units,
you did bring up a good point, though. I mean, like in your market, you're not making 200 basis points. I mean, you guys, to be competitive, are pricing these things out with commission caps and 50 to 80 basis points, and that's just kind of what rolls with the turf. When you're closing 6, 7, 8 million, unfortunately, you're not walking home with $170,000 paychecks.
Exactly.
If you are, maybe I should move there tomorrow. But then again,
right. There's always a trade-off, and there's always adjustments for different markets in terms of commissions and all of that stuff. But there's always opportunity as well. It's just a matter of finding it in your local market. And this is what I found in my market. There's a huge niche for this. For whatever reason, Southern Californians love to be self-employed. They love they love to be independent contractors. They love to be freelance, and this product happens to suit them. Or you've done a couple of deals for people who were famous, not really famous anymore, have a bunch of money in the bank, don't really make any money anymore. Great. Here's a product for them too.
Awesome, man. Awesome. All right. Anything else before we go? Any tips, tricks, wisdom?
No, that's it. Just I'm an open book. If anybody watching this ever has any questions, or just wants to pick my brain, or feels like they have some that they would love to share with me, and we could collaborate, I would love to hear it. They can reach me at justin@lendla.com, and I'm happy to talk to anyone. And I don't play it close to the vest or pretend like I've got the secret sauce. I'm here to work with everybody and get us all up to the next level.
Oh man, one question I forgot to ask you. That video you made yesterday was kick-ass. Did you have somebody do that, or did you make that yourself with the watermarks and all the cool stuff you had in the video that I shared yesterday?
Oh yeah, we've got a guy, Chris, in our office who has become pretty proficient with that. We bought a gimbal off of Amazon, plug in an iPhone. The camera on the iPhone is pretty amazing. The gimbal was $120, and he's got some Adobe Premiere photo or video thing, whatever, on his computer. He can knock those out in a couple of hours. It takes us 15 minutes to film it. He knocks it out in a couple of hours, and it's been really great.
Awesome, man. Well, I appreciate your time. Thank you again for sharing some of your tip strategies when it comes to non-QM and jumbo. Wish you luck. Hopefully, I know for sure I'm going to see you, I think, at Scott's event in May.
Awesome. Great.
If I don't see you before then, best of luck, and hopefully maybe I'll run into a non-QM deal I'll be picking your brain on soon.
All right. Sounds good, man. Take care. Thanks for having me.
Got it. Thanks for coming.